Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do a Twitter, even though I put up a lot of these charts myself. We're going to talk about some of the chart setups that I'm seeing in the market. I'm not going to talk about the specific companies themselves, but I'm going to show you some specific companies that have incredibly good chart setups. Incredibly good. And what it's telling us is that it's coming. The commodity bull market, it is coming, and we're in it. It's already started. And I'll give you my financial opinions along with this. Again, if you guys need any help with anything, definitely check out finding-value.com, the Platinum membership. You can use the word discount in the coupon code to get a discount. And if you want to follow me on Twitter, you can go at finding_finance. So what we have here is the stock market. And I'm pulling up charts to show you guys evidence of what is potentially coming. And I said, these patterns are laughable, everyone. I get people telling me, wait for the pullback to purchase. These all look incredible. Now, I didn't put the ticker symbols on here. I'm just showing you some of the patterns that are created. Last bull market, we had a buy signal in 1999, which is the bottom right here, with our commodity to stock ratio. If you looked at the expansionary phase of real estate, we were going into an expansionary phase, which is an inflationary environment, and money rotates under an inflationary environment. And what we had is this hump here, which is kind of the first little lead-in hump here from 1999 all the way till 2002. And then we launched higher in a gigantic move all the way to the peak in 2008. Then we went into a correction. It's a 3-hump correction. 1, 2, 3. We broke out. We came on back, did an overextended retest. And now we're heading higher again in this particular company. We had a correction that basically went upward in this stock. Super duper strong for a correction to correct and run upwards like this. So we've broken to the upside here again, and we are in full bull mode with these gigantic buying pressure months for this particular stock. And this thing looks absolutely beautiful. This here, if someone were to ask me, irrespective of what this company is, you say, is this a bullish chart setup? Oh God, yes, this is. You're almost at 52-week highs on this. And people are, you've got people arguing, oh, a recession is going to come. Oh, this, that. Guys, this is the chart. This is lining up for new all-time highs at any second. Do you think my portfolio position in this company is down? No, it's way up. It's way up. And this is one of the companies that I own a good chunk in. That pays a pretty big dividend. Here's another one. What this is this is the ideal buy for a trader, is basically on the breakout, and then you get this retest. What does this look like? We had a massive run up since 1999. That's where we got our buy signal for commodity to stock ratio. You bought in, you hold on, and you could have been holding on this whole time, but I would have sold up here, lightened up. That's when the commodity to stock ratio was a sell point. Then we went into a 3-hump, 1, 2, and then 3. It didn't go all the way back down, because it's such a strong company that we had the 3 humps and we broke it out. We're at point A right here. We did a retest, and that retest is this bottom portion that we came up into a falling wedge and broke to the upside, and we're starting to move higher. Now, I don't know the path that this is necessarily going to take. We could come back a little bit. We can move around, but this looks ultra bullish. We're sitting on top of the consolidation pattern. This here is as bullish as you can get, and you're at the ideal buy for a trader almost, which was right where we went in on our website. We went at the most ideal point. And you could even say, no, I'm not going to say that, but that's a really good entry point, and this looks ultra bullish. I go to another one. Now, this is another company. I'm not revealing the company's names, but this here in 1999, this is your buy point at the bottom here. You would have nailed this bottom almost in this general vicinity here, And all you had to do was hang on until 2008. Yeah, there was a couple of hairy pullbacks, but we've launched higher. And then we did a 3-hump consolidation. 1, 2, 3. Broke to the upside. And we're sitting on top of this consolidation pattern. That's like as bullish as you can get. So, some people, I know they're very fearful of a recession, but these charts aren't exactly telling me that a recession is going to happen. And usually what you see is a large down movement. You have to also keep in mind that China went through its recession already. They are the number one manufacturer of goods. And if commodities are going to go short, or we're going to have deficits in certain commodities, they're going to be the ones converting those commodities into usable products. So with China basically reopening and China also doing stimulus, having low interest rates, all this stuff, they are stimulating their economy to ramp up commodity consumption to make products. And they're going to ramp up their energy use. This here is showing me and telling me that something's about to go to the upside here. And these charts all look, I'll call it fabulous. Now here's another one, right? This is with the platinum members. Here's a setup. I'm not going to share the company's name, but we have a nice little squeeze up. We entered it right at the support level. It's gone up. We're probably going to do a little bit of a retest move. Maybe we get a little bloody nose, and then we're going to start moving on higher. The resistance line is up around $39. Our entry point, upper 2s, lower 3s was our entry point. And we're looking at a $39 potential exit. That's over a 10-bagger. We've got another one that looks absolutely ridiculous. Now, what I put is a line coming through here, contacting these points. And I don't know if we're going to go up here. I'm not claiming that it will go up to that price, but we're at $11 down here. We were buying at $6, $7, $8 on an inverted head and shoulders pattern, which is the bottom of a Jesse Livermore accumulation cylinder, where we could run all the way up and hit our first resistance maybe at $40. But we could run, and I don't know if it's going to get up here, we could go all the way to $180, $190 if the deficits in this particular commodity and this company are large enough. So we could have a very big upside. Now, I don't know where it's going to necessarily go, but guess what? I've got my shares. I'm ready to ride this ride, and I'm happy to ride it. And I'm just showing you setups that I share on the website. And here's another setup. We entered this. This is a double bottom. We entered it right here after I saw this. I was like, man, this looks really strong. That's at $2.40 all the way up to $3 was our entry point. And it's at $12.46 today. And we should be holding it. We could get a little bit of a pullback and work our way on higher, even up. Another potential 10-bagger. Here's another one that we entered. We entered the bottoms here. Boom and boom. $5 here and $3 and something cents there, $3.80 or whatever it is. So $3.80 and $5. And it's sitting up at $15 right at resistance. And the next big resistance line is up at $90, $95, $100. You get in at $5 and you ride it to 100. That's life-changing gains. And this is stuff that people own on our website. We are actively in these, and we pick the bottom of a bunch of different energy service companies. Also, lots of drillers and whatnot. Now, here's another one. We talk about these big opportunities. We had this large consolidation period right here. We had a false breakout slingshot cheetah pattern in 2020 that slung this thing up to the upside. We had a little bit of a pullback here. Now, again, some people are saying, they're going to buy this top and buy the bottom, or sell the top and buy the bottom. It's like, guys, I'm not playing that. You load up when it's coming on up. You buy on the breakout, buy into this strength, and then I just hold on. And it's one of my larger positions, and maybe this is possible. I just took the tops here, and it could go all the way up to, $800 or something like that. And I've got positions all in there at, $10, $15, $20, $25, $30. Now, I don't know if it's going to necessarily go up there. We'll see. I'm not claiming that it's going to go up there, but I can tell you I'm holding on to this stuff and things look pretty dang solid. And this is exactly what I look for, these consolidation periods that we're breaking out and starting new leg up higher with the money rotating around in the economy. There are shortages, massive deficits coming in some of these materials. And I don't think people have really figured that out. You know, I am positioned very heavily in a lot of these companies. And I don't know if people realize what potentially could be coming. And, you know, I was looking at this chart here. What this is your PPI to CPI. Let me add the watermark here real quick so you guys can see it. It's the PPI to CPI ratio. And that's what I'm looking at here. And we've got a pretty large down movement, but here's some things like this is different, guys. We've never seen this. This is a double bottom. Like this is what a double bottom looks like. That double bottom pattern. And we usually get stuck kind of at the top here. We hit that resistance line, came on back. A lot of the companies are doing this exact movement. Copper, rare earth metals, a whole bunch are doing these big double bottoms. Some of the fertilizer companies are doing it. Some of the energy service companies. We've got massive inverted head and shoulders going on in oil and natural gas companies. This could get real ugly if we break like that. Like, that's a world that no one has felt, period. Not even the 70s. The 70s are here, and that was in an overall bigger downtrend move. And you could say the 70s were similar to what we just went through. But if we do break higher, and I don't know if we are, I don't know for a fact, but I can tell you a lot of things are setting up where I think this could go higher. And this here, no one's lived through that. It's going to make the 70s look like nothing, I think. So we could see another very large inflationary push coming ahead of us at some point. And that's going to look very much different. And I'll show you some other setups here that I'm also looking at. So here's another company. And when you look at this, this is an inverted head and shoulders pattern that is forming. Yes, it's still grinding out the right-hand side, and we very well could pull back a little bit to some degree. You know, maybe we do a pullback like that, or maybe it doesn't pull back. But this is an inverted head and shoulders, and this is a very large bottoming pattern that we see where things could really start to move higher. It's only at $1.80, and it could go all the way up to $18, $20 during this bull market, and it was at 9 cents at the beginning of it. So these patterns that I'm seeing in here are just massive, guys. And I'm not trading in and out. I'm not going to try to time the short term. I'm trying to buy these, stay in them, and they all have these big bottoming patterns. This here could be, I don't know what the heck is coming. And all I can say is I haven't seen patterns this big, and they're like big bottoming patterns. Like that PPI to CPI ratio that I was showing there, which is, I'm going to pull it up another time here to show you guys just how ridiculous this thing looks. This ratio is a big deal. Like this is a big deal. Because what that means is starting in 1947, we've had a declining PPI to CPI ratio. Think of it as your producer price index, which is basically the feedstock of commodities, was always getting cheaper than your consumer price index. So basically, with technology advantages, with more abundant commodities, with the increase of energy intensity that we could get those commodities with, we've always had a decline in this ratio. You could also maybe tie it to the inputs of perhaps how much money they were creating in the system. But I also think that commodity shortages and the way that our system is designed for money, fiat currencies, I think that design is going to clash. And this is telling us the clash is here. It's already double bottomed and it's ready. It's already moved up. And we had a little bit of a relief pullback, consolidation in the short term. If this goes higher, guys, which no matter what I pull up, crude oil is breaking to the upside. There it is. There's your bull market from here to here. You had a big consolidation. We had a first leg higher. We have our pullback, and now we're starting to break to the upside. That's why I'm watching all of this. There's your little breakup to the upside here. Now, I don't know what the path is going to be. I'm not trying to be some sort of genie that just guesses the path. The path is, I wouldn't have guessed that they would have stopped at this low, but they dumped oil on the market. They were successful. I didn't even know if they were going to be successful at it. But you could also say, if you get real picky here, if you kind of put this through here and you just kind of draw this in, guys, and I'm just going to give you another kind of viewpoint here, all right? This here, if you look at it, see this here? That's a Jesse Livermore accumulation cylinder. So, and I know a lot of people, so it's 1, 2, 3, 4, 5, 6, and 7. That's your accumulation cylinder. You know what happens after these? They usually go ballistic to the upside. And I'm just sharing a lot of this stuff with you guys, and uranium has it, oil has it, a lot of the companies have it. Now, these cylinders, they don't exist out of nowhere. They come based off of people accumulating. And if we get a big break here, guys, it's not stopping at 120, I don't think. I think we're going higher than that. And if I were to put a guess on it, I think, let's do all and then back out. I think the possibility, if that's the first wave, if I were to throw something on here, trend-based fib extension, and I know people do that, we could, end up at like $360 or $250, $360, $480. I don't know. We'll see where it ends up. But that's a big move, and we're already breaking that potential breakout here. So the move is already somewhat underway. You could also look at copper. Dr. Copper is generally a kind of the first thing where if we have a recession, it's going to pull on back. But this thing's been pretty strong, and we're going to come into very tight inventory levels. And if you look from a big picture view, this here is your consolidation period here. We had a breakout, a pullback, and now we're starting to launch higher. Are we going to start to really run here? And what would the price projection be of copper? Let's try it together. So let's just say it goes from here to here and then pull down, something on the lines of that. And if we were to look at potential movements, about $8 a pound, maybe $10 a pound, all the way up to maybe $13 and peak of maybe $16 a pound. I don't know where this thing's going to go, but those are all possible movements. So, this is some of the stuff we talk about on the website. These are some of the things, and I don't think, I don't try to worry myself with a near-term recession, because the recession's not going to cure the supply side problems. So I'm investing for those supply side problems. I've talked about Trifigura? And if you look at aluminum, could aluminum stockpiles disappear by 2024? And these things they're burned in my mind reading some of these articles, and I'm just like, wow, is this really coming? And the deficit says aluminum is a very bullish story. And the thing I always go back to is the deficit is now moving at such a speed that it's unsolvable, actually. Now, if these deficits are unsolvable to some degree, and they really start to come up and hit some massive deficits, that's your opportunity, guys. And I just picked up one. They're unsolvable probably for copper as well, depending on what years you're looking at. And they all kind of hit in the mid-2020s. And these charts are all signaling that that is the case, that that's the most likely outcome. So I buy this stuff. I've already bought a lot of it. I'm going to continue to cost average in. I'm just going to hold on. That's my strategy. I'm not trying to time this stuff in the short term. And I don't care if someone calls the top here and someone calls the bottom. It doesn't matter. Does not matter. All I care about is adding in here. If I can get it there, adding in here, adding on the breakout, ride it on up, get a pullback, buy a bunch more, and just keep going. I'm playing the big picture move. So that's what I want to talk about today. If you guys need any help with this commodity bull market, definitely sign up to the website. If you guys like this content, give me a thumbs up and subscribe to the channel if you haven't already. And really appreciate you guys watching. We'll catch you next time. This is Finding Value.